Is Uncle Broker taxing your commission too much
without giving the support that you signed up for? Don't be a victim of outdated broker models. It's time for an upgrade.
Here is a golden chance to make 100% commission
with London Foster. London Foster's main goal is to empower an associate and make sure you, the realtor, are getting the most out of your hard work and commission. With an excellent proven track record, latest tools and technology, and exceptional experience, we strive to create the perfect environment for our associate, providing multiple opportunities for you. No hidden fees and no gimmicks. 100% commission for our associates by empowering you with the benefits like
a personalized website with IDX searchability, simulcasting your listing to sites like Realtor.com, Zillow, Trulia, and different search engines for brand recognition. An office at the famous Lincoln Road.
Direct broker support and free weekly and monthly training from Realtor.com and other partners. A personal business trainer resolving all your queries. In-house private equity fund. No waiting on checks. Get it on the closing day.
We understand it's a very competitive market out there. The old broker models don't work anymore. And you deserve more for your hard work. So it's time you give yourself an upgrade with London Foster.
I want to welcome you. I also want to tell you guys about something we do here at London Foster. We do a meeting four times a week. It's called the London Foster 101. This is a recruiting call. It's also an orientation. So if you've already joined and you haven't taken it, probably a good idea to take it. We're going to tell you all about the company, how we work, our process. We're going to show you a little bit about our back office and how easy it is to use it. Like I said, we do these meetings 4 times a week. I do it Monday, Friday, and Saturdays at noon. We also do one tonight on Wednesdays at 7 p.m. So all you do is just go to joinlondonfoster.com. You're going to scroll down. You can watch this little video where Bobby tells you all about the company. You're going to request a call, attend the seminar, or join. Obviously, the one you're going to do is request. And you're going to click on start. You're going to, You're going to write your name, press next. Let us know if you're a London Foster realtor. You're going to put in your email and you're going to put in your phone number. Guys, this is how easy it is to do anything at London Foster. This same process that I'm showing you now is how we do our paperwork. If you've ever had to sit in an office for hours doing paperwork in order to get paid, forget about it. At London Foster, we do everything in 3 minutes. You just let us know how you've heard about us. And then last but not least, you're going to put in your license number, 3371444. Four too many. And you're going to pick the day you're going to do it. I'm going to say I'm doing it on Wednesday at 7 p.m. and I'm going to submit. Every time you submit something at London Foster, you will get a check mark. You'll also get an email confirmation with the link. This call, like I said, it's like 40 minutes. The idea is to tell you about the firm, get you excited about it, get you excited about making 100% commission. Once you fall into that meeting and you attend, if you're ready to join, onboarding takes less than 30 minutes. Let me show you something else on the back office. I want to show you guys because I've been getting a lot of calls from agents regarding the vendors list. Okay. The vendors list is a tool that we created for our London Foster agents. The idea is if you're looking to use a vendor, instead of, what in the world? I got logged out. Okay, guys, give me a second. Instead of going to the vendors list. You can look at our preferred vendors. You can look up our title company, our mortgage company, our printing company, anyone like that. You're going to be able to look at it. Of course, when I'm demonstrating something is when it's not letting me log in, right? Give me 1 second, guys. Okay, and he did it one more time. I'm going to go under vendors list. If you want to look up our preferred vendor title company, you're going to be able to click on title. All her information is there. Janet is actually, I think she's on the call. Janet, are you on? John, is Janet on yet?
No, she's not.
Okay, well, Janet is our new vendor for title. For those of you that have not seen it, we announced that a couple days ago. If you ever need a call from Janet, all you need to do is click on this button and she can either call you or your client. If you're ready to present the offer, the contract, I'm sorry, all you do is click on here. You're gonna be able to fill out a really quick form and go directly to her. It'll have all the information you need to provide her. So it makes it very, very easy. I see some people asking something in the chat. Yeah, everybody's writing their name. Guys, I don't need your name on the chat. I need your name on your title. I need your picture and your title. I don't need it in the chat. I'm not going to be copying and pasting this. So everybody who's going to be attending, you need to have your camera on. You need to have your name spelled out like Luis Duarte had there. There we go. Look at Luis. Luis is looking sharp and he did it right. So guys, that's all we need for you to do. I'm sorry, I was saying about the vendors list. You can go through here and we actually have bulletin boards where you can reach out, promote vendors if you want. You can look up any other vendor that you like here. So it makes it very, very easy for you, okay? Again, Lily, I don't need you to write it in the chat. I'm not gonna be copying and paste this. You have to write it on your window. Your window must be on and you must be able to write your name in order for you to get credit. This is the way Stephen is gonna take roll. Also, guys, I want to remind you about the getting started part. This is meant for newer agents or people that just joined. If you want to do your marketing, if you want to look about how to buy a website, how to buy an email, how to get an ATM card. Yes, London Foster does hold escrow for you. And we also provide you with an ATM card that you can get at any time. There we go, Guido. Guido added his name. If you want to join the London Foster Pro Chat, if you want to do a rental, a sale, or a referral, any of that, you're able to do it. If you are looking to get a call back, all you need to do is just go to Join London Foster and we'll request a call and one of our recruiting team members will call you. Now, for those of you that are London Foster agents, I've had this question a lot also. Hey, how do I reach the broker? All you have to do is click on the logo, scroll down to the broker information, and you're going to be able to look up Bobby's information. John Belbin, who is also on the call, is the London Foster manager. He's going to be able to help you out. We have moved our main offices from our Miami Beach office to our downtown Dadeland office. So if you ever need that address, it's there. And then last but not least, we have a toll-free number where you can call and reach out to one of Bobby's 3 assistants anytime, Monday through Friday from 9 to 5 p.m. So what does that mean? Well, that means, let's say, Kelly Jackson. Am I saying that right? Kelly Jackson? Kelly Jackson wants to reach the broker, but she says, Memo, you know what? I don't think this is a broker question. This is kind of a silly question to be bothering my broker. Who can I reach out to maybe give me some guidance and tell me what to do? Well, Kelly, that would be the 1-844. One of the assistants will tell you, oh, Kelly, you know what? That's an accounting question. Let me get you together with the director of accounting, Loida, and Loida is going to be able to help you out. So the idea is that they're going to be able to funnel the calls because there are some calls that are kind of silly to bother your broker, right? Oh, I ordered a business card and they spelled Kelly with a Y instead of with an E. I'm so upset. Probably not the best call to call your broker, right? More of a marketing question. So that's why you would reach out to them. Okay, guys, so we're going to go ahead. Yeah, you want to go to the Zoom settings, and you want to write in your name. Nope, we haven't closed any offices. We just simply moved the headquarters, Jesse. We found that it was a lot easier to do checks and mail having them all delivered there. So it's been updated in the entire website, including the DBPR. So it's going to make our lives a lot easier because the accounting team is going to be able to 3 times a day check the mail. So it's actually a lot easier and a lot quicker. We've had a really good positive response to that. Okay, guys, I think that my 2 cents are done. I just wanted to make sure that everybody's inside. Janet, are you on there?
Yeah, she's on, but I think she's having issues with her audio.
Okay, no worries. Well, I introduced Janet. She's under vendors, under title. I wanted to introduce her physically, but you guys will be able to look her up. As you know, we get a discount on our fees if we use a preferred vendor title company. And we also are running a promotion she's running a promotion for the months of May, June, and July, where she does a promo code on the cost to the buyer. So guys, definitely reach out to her and ask her about that promo code. She'll be happy to tell you all about it. And if you need to visit her website, it's ititle.com. Okay. Okay, I think we're ready to go. Mr. Steven, I'm going to go ahead and take that picture in 2 seconds. And I'm going to be listening in. If you have any questions for me or anything else, by all means, okay?
Sounds good.
Can you see my name under my picture?
Beautifully. Victoria.
Yes, perfect.
Malinovskaya.
Perfect. Thank you.
No, thank you. All right, guys, I'm going to go ahead and stop sharing my screen. Stephen, if you want to go ahead and get started, I'm going to go ahead and do like a little, so I know where to edit it. Go for it, Stephen.
All right. I need to share my screen. Could you host disable participant? Can you enable screen sharing?
Give me 1 second. John, can you make him a host?
Yeah, 1 second.
Thank you. So the cut will go here. I'm glad to see that at least Jesse laughs at my jokes. At least one person out of the whole room is laughing with me, right? Or at me.
Okay, you're all set.
All right. So you guys should be able to see the PowerPoint, right?
Absolutely.
All right, fantastic. So a little bit about me. My name is Stephen Gurian. I'm an attorney. I've been practicing law for a little over 10 years now. I focus my practice on all the sexy stuff. So probate, tax, estate planning, 1031 exchanges, all the fun stuff that everyone goes to law school for. So we have offices in Coconut Grove. We have offices in Orlando, in Maitland, Florida, and in Boca. And we practice statewide. So if you guys ever have an issue with a listing that needs to go to probate, or you have a foreign buyer seller, or you're looking to do a 1031, please think of us. And my number's on the screen now. That's my direct line. So if you ever wanted to reach me, just call that number and you'll get me each and every time. And then you also have my email on there too. So feel free to ask me questions. Whenever something comes up, I'm more than happy to answer them for you.
Stephen, I'm sorry to interrupt you. Guys, everybody who's at the bottom of this page, Carlos, Kenya, Marcelo, Luis Duarte, Giselle, Firefly, Olga, Lau, Manuel Madero, Ramon, everyone who's not sharing their screen at this moment, you will not be getting credit for this class. Again, the camera must be on. You must be on now. You must be on halfway through the training, and you must be on at the end of the training. Guys, I'm sorry to be the mean one, but we have to obey these rules as Stephen has a permit in order for him to do these classes. So if you do not have the camera on, I cannot give you credit for this class.
And it's not us, it's FREC. Like, we don't want to be the bad guys, but unfortunately, the powers that be, put these requirements on there. So you gotta have the camera on the whole time, if you want credit. If you don't want credit, that's fine. just say so in the chat, and obviously don't email me at the end and ask for credit. So the way it'll work is this: at the end of the class, I'll give you a code word. Email me your full name, your license number, and the type of license that you have. So if you're a broker, you're gonna put BK, your license number. If you're an agent, you're gonna put SL and your license number. Do it before 5 o'clock today. That way I could submit everything tomorrow and get you guys your credit before the end of the week. But anything submitted after 5 p.m. today, I can't put it in the system. So what are we going to talk about today? So we're going to talk about FIRPTA. Not the sexiest of topics, but one that's pretty important. And if you're dealing with real estate in the South Florida market, you're going to come across this all the time. And a lot of people don't know how to plan for it. They don't know how to, potentially avoid it. And on the purchase side, if you represent a foreigner and they're looking to buy, we'll talk a little bit about how you can structure their purchase so that whenever they want to sell in the future, they can actually avoid having to do the FIRPTA remittance. So as we all know, COVID changed a lot of things. So it also changed things with the IRS. I mean, there's such a backlog of returns that's stuck in the IRS right now. I'm sure all you guys are 1099s. Like none of you guys, have W-2 income, but if you probably don't get refunds. But if you are due a refund, like they're taking years and years to get refunds out. And if you remit the 15% for FIRPTA, a lot of times it could take up to 2 years to get your refund back, especially if you don't set up the transaction right at closing. So we're going to talk about that. So we're going to talk about, the rule, what are the exceptions to the rule. We'll talk about like when you can limit withholding. We'll talk a little bit about the procedures for withholding. And most importantly, we're going to talk about who's on the hook for the FIRPTA. So what is FIRPTA? It's the Foreign Investment in Real Property Tax Act. So many years ago, what wound up happening in the US was there was a lot of people, a lot of foreigners buying real estate in the US, sitting on it for years. And obviously, real estate is typically going to appreciate over time, right? It's going to at least follow inflation, the 3 to 5%, every year. So, people would sit on them for years, eventually sell it, and they have these huge capital gains. But when they sell the property, they get 100% of the net proceeds of sale. They pocket the proceeds and they leave the country and never be heard from again. So the IRS, got wise to it, and in their infinite wisdom, they enacted the Foreign Investment in Real Property Tax Act. So now, ever since 1980, if you have a foreigner that's looking to sell real estate, you have to withhold. Now it's 15%. Originally it was 10, but now you have to withhold 15% of the gross sales price. So when you're looking at your FAR contract, whatever it is that you're under contract for, you take 15% of that, and it's either going to stay with the closing agent, or the closing agent's going to take that 15% and send it to the IRS within 20 days of closing. So let's look at the boring tax stuff for a quick second. So what is the general rule? So under 1445 of the code, except as otherwise provided, in the case of any disposition, which means sale, of United States real property by a foreign person, the transferee, in other words, the buyer, has to deduct and withhold a tax equal to 15% of the amount realized on the disposition. So what does all that fancy stuff mean? So let's break down the general rule. So like I said before, disposition means the sale of the real estate, the sale of the property.
Steven, I'm sorry. I think your screen stopped sharing for a second.
Oh, it stopped sharing?
But everybody looks really good.
Are we good? Yeah. All right.
Yep.
So what is U.S. real property? So it's any property that's located in the continental United States plus the U.S. Virgin Islands. So like Puerto Rico and Guam and those other territories, it doesn't count. But U.S. Virgin Islands and obviously the continental United States plus Hawaii and Alaska, that's U.S. real property for purposes of FIRPTA. So what's a foreign person? A foreign person is a non-resident alien for income tax purposes. And we're going to get into this in a little bit, but it's possible for you not to have a green card and for you not to be a citizen and get away with not paying FIRPTA. And we're going to get into that rule in a second, but just keep that in the back of your mind. And like I said before, the transferee is the purchaser of the real property interest. And the amount realized is the contract sales price. So not a lot of people know this, but the buyer is actually the one that's responsible for doing the withholding. And why is that? Because they're the ones that have the money. They're the ones that are starting the transaction by funding it when they're giving money to the escrow agent or to the closing agent. So because they're the ones that are, initially in control of the money, they're the ones that need to do the withholding of the 15% when we're dealing with a FIRPTA transaction. So again, remember, unless there's an exception, to the rule, the purchaser, the buyer, has to withhold 15% of the contract sales price if the seller is a foreign person or a foreign corporation. So there's several exceptions to FIRPTA withholding. We'll talk about, the three most common ones. The first one is the seller signs what's called a non-foreign affidavit. I'm sure you guys have all seen this, and we'll look at an example of one. But basically, it's just an affidavit signed by the seller, just saying, "Hey, I'm not a foreigner. I'm a U.S. citizen or U.S. resident for income tax purposes. Don't withhold my 15%." Everybody signs this if you're a U.S. citizen and you're buying, and you're selling real estate. It's part of like your standard closing package. Now, the other exception, and this used to be a lot more common prior to COVID, but it used to be where you could ask the IRS to send you a qualifying statement, or sometimes it's called a reduced withholding certificate, saying that either FIRPTA doesn't apply to the transaction or you don't need to withhold because maybe you're selling at a loss. So why do I need to send you 15%, which is supposed to cover my capital gain, if I'm selling at a loss? And we'll get into more detail with that in a little bit. And then the final really common exception is called the personal residence exemption. And this used to be, pretty popular back in the day, but essentially if you have real property, you sell it, and the amount realized or the contract sales price doesn't exceed $300,000, and that property is going to be used as the primary residence of the buyer, then you actually don't have to remit the 15% withholding. But nowadays, I don't know what you can get for $300,000 in South Florida. I mean, maybe like a condo, like in Kendall or something. But this exception is becoming, more and more rare when it used to be, pretty common. So let's talk a little bit more about the non-foreign affidavit. Again, this is the most commonly used exception to FIRPTA withholding, and it just simply states that the foreign seller isn't a foreign person or foreign entity. So the non-foreign affidavit is signed by the seller and supplied by the seller, and it's given to the purchaser. It's given to the purchaser at closing. And all the non-foreign affidavit states is that the transferor or the seller is not a foreign person, not a foreign entity. You're going to supply your social security number or your ITIN number if you're a green card holder and don't have your social security number yet. And you're going to give your home address. And obviously the home address needs to be your US home address in order for this to work. So everything needs to be US. You basically need to show, the IRS, in case like the file gets audited, that the seller was a US person. If you have a social security number or an ITIN number, you're obviously going to be a US person because you were either born here in the case of a social security number, or you have an ITIN because you are filing taxes here as a foreigner, and because you have a green card. And there's other little exceptions that we're going to get into in a little bit. But let's actually take a look at what the non-foreign affidavit looks like. So this is it. It's pretty simple. It's a one-pager. Again, all it says is I am not a non-resident alien for purposes of U.S. income taxation. My U.S. taxpayer identification number, so either your social security number or your ITIN number, is, whatever it is, and then you're going to give your home address. So look at the bottom. You're certifying to the IRS that all the information in here is true and that there's no false statements. So what happens if you lie on the non-foreign affidavit? Everybody's on the hook. So not only is the seller on the hook for the 15% and you have to pay fines and penalties and interest and all that stuff, but the closing agent and the buyer could be on the hook too. So, it's very important that you know ahead of time what you're dealing with. And maybe some people don't know that they're foreigners. Like they think, oh, I'm here, I have a visa. So I don't think, FIRPTA applies to me, but just because you have a visa doesn't mean that, you're here as an income taxpayer, as a U.S. citizen for income tax purposes. You may have only been here 90 days, so definitely you got to keep that in the back of your mind when you're dealing with foreigners. Do they have a green card? Do they have maybe a longer, visa, something that allows you to be here for at least 6 months out of the year? Are they paying taxes? Typically if somebody's paying taxes in the US, they're probably in, a US citizen or a US resident for income tax purposes. Thus FIRPTA wouldn't necessarily apply. So let's talk a little bit about, what is a non-resident alien? Like, who are these foreigners? So an alien is just an individual who is not a US citizen or a US national. A non-resident alien is an alien who has not passed the substantial presence test or who does not hold a green card. So remember earlier I said, you don't necessarily have to have a green card to potentially not pay FIRPTA. If you meet what's called the substantial presence test, then you could actually get away with not having to do FIRPTA withholding if you're a foreigner and you're selling real estate. So what is this substantial presence test? So it's where you have a non-resident alien and they just have to show that they were physically present in the US for at least 31 days in the year in which they're filing a tax return. So let's say they are, selling real estate this year. They have to prove that they were in the country this year in 2023, at least 31 days. And you also have to show that the total number of days present in the tax year, plus going back an additional 2 years, equals 183 days. So what does that mean? So there's a look back period of 3 years from the day that you're selling backwards, where you have to show the IRS that you've been present at least 183 days, which is essentially, 6 months. The math is a little funky on this though. So you get credit day for day for the current tax year. So let's say we're selling property this year, 2023, and I've been, present in the country at least 90 days in 2023. So I get credit day for day, 100% of the time that I'm here in the current year. Now, when you go back in other years, so to year 2, you only get credit for a third of the time that you're actually here. So if you were present in the US for 2022 for 90 days, a third of that is 30 days. So that's what makes the math a little funky. And then to make it even more tricky is when you look back to the third year, going back, you only get credit a sixth of the time that you're in the United States. So if you're here 90 days in 2021, then you only get credit for 15 days of being in the US. So the math is a little funky there. So ideally, when you add up these 3 years, as long as you hit 183, even if you don't have a green card, even if you're not a US citizen and you're just here on some kind of a visa, or maybe you're even here illegally, as long as you hit 183 days, FIRPTA won't apply to the transaction. Another little thing is if you do have a green card, you actually can sign the non-foreign affidavit. That's enough. So green card holders can sign non-foreign affidavits and they don't have to worry about FIRPTA. So, oh, and by the way, so the magic number, in case somebody wants to do the math, so it's to pass the substantial presence test, what you got to do is stay in the country at least 121 days each year, and then going back 3 years. So if you're here 121 days this year, in 2022 and in 2021, you're going to pass the substantial presence test. So you don't necessarily have to be here like, the full 6 months, in the current year, and then, do the funky math. So you could actually stagger it so that you're here 121 days a year, and you'll be good to go. So who else is subject to FIRPTA? So entities controlled by non-residents. So what does this mean? This means if you're an LLC with a single member, or that member is a non-resident alien, they got to pay FIRPTA. Foreign corporations that own real estate, they got to pay FIRPTA. So remember, the IRS provides that a transferee, so the buyer of U.S. real property, has to withhold the tax if the seller is a foreign person. So I want to talk a little bit about disregarded entities real quick. So any kind of LLC or partnership is considered a disregarded entity for tax purpose. So what does that mean? So with LLCs and partnerships, you don't actually look at the entity itself to determine whether or not it's a U.S. partnership or a U.S. LLC. You're going to look at the taxpayer, the owners of those LLCs or the owners of those partnerships. So whatever their, residency status is also going to determine what type of LLC or partnership, we have in this transaction. So, U.S. real property that's owned by a disregarded entity, can potentially be subject to FIRPTA depending on what the tax status is or the residency status is of its owners. So the IRS will treat the individual as the transferor, as the seller of the real estate, and not necessarily the disregarded entity. So if I'm a foreigner, I decide to open up a Florida LLC, and I'm the only member, they're not going to care. The IRS is going to say, look, the foreigner is really the one that matters here. They're the ones that have to pay FIRPTA. So there's also something called an entity affidavit. So let's say you have a multi-member LLC. This is actually exempt from FIRPTA, even if the partners in the multi-member LLC are foreigners. So an entity affidavit, like the non-foreign affidavit, allows for an exception of FIRPTA withholding. So, similar to the non-foreign affidavit, you're going to provide the name of the seller, so the entity. You're going to swear and affirm that the transferor, that the seller is not a disregarded entity. You're going to provide an EIN number, and you're obviously going to give the transferor's office address, which, should be a U.S. address. So you don't get disregarded entity status so long as you either elect to be taxed as a C Corp or an S Corp, or if
Steven,
you have two members in the LLC.
Steven, do you have the chat room open? There's somebody's asking a couple questions.
Oh, somebody's asking questions. All right, let's take a look.
I added your information there. I also added a message to new agents, but there's a question there regarding, I think it's Kelly says, the seller's attorney is usually responsible for clarifying this or confirming this, and definitely for preparing the conveyance documents for the seller. Make sure they have an attorney.
Yeah, it's like a comment. Yeah, so look, the reality is, it's on the buyer, but the seller's attorney is going to potentially be on the hook too, right? So they're going to want to confirm all this information. They're going to want to, prepare the conveyance documents and all that. But as you're going to see in a second, if we know ahead of time before closing, you could prevent a lot of hiccups, because a lot of times what happens, at least when I get cases and I have to do FIRPTA tax planning, I find out like a week before closing, hey, this person's a foreigner, and then they don't want to withhold, they don't want to give up 15% of the sales price. They want to try to avoid that. And typically if you wait, that late, you're probably, gonna have to, remit the 15%. It's,
Okay. And then
just
Rafael asked another question, which is, what if the LLC has both a US and a foreign owner? I think you already answered that. They don't care about the US.
Yeah, so if you're US and foreign, as long as the LLC has two members, FIRPTA doesn't apply at the property level. So what's going to wind up happening is this. Let's say I'm a US citizen and Memo's the foreigner, right? And we're partners in a real estate transaction.
Why does it have to be like that? Why can't it be the other way around?
I'll be the foreigner. I'll be the
Okay.
foreigner if you want.
Dale, all day long. No, I'm the foreigner. Dale.
You'll be the bad guy? All right.
I'm the good guy. I'm always the good guy.
So what's going to happen is, yeah, when we sell the real estate, we don't have to withhold the 15% because it's a multi-member LLC. But as soon as the LLC makes a distribution to myself and to Memo, he actually has to withhold 30% before he takes his full distribution and send it to the IRS. So that isn't always the best strategy, just, quickly form a two-member LLC, prior to closing. Because then, you're going to get it with a 30% withholding because, the IRS knew. So this was happening a lot, actually. So people would form these LLCs, throw somebody else in as a member of the LLC so no FIRPTA, right? So the same thing was happening. People were running away with the money and not paying tax. So now they have this withholding requirement when you are, making a distribution from the entity to its members after the sale of real estate. Let me go back to the chat to make sure there's no other questions.
The last one, Stephen, was the substantial presence test is regardless of the selling price, correct?
Yeah, it doesn't matter. So the substantial presence test, all you're going to look at is how long you've been in the US. So if you meet that 183-day test, again, doesn't matter if you have a green card or not, doesn't matter what type of visa you have. As long as you meet that test, FIRPTA won't apply to the transaction. Obviously, you got to be able to, to document that, you're going to show when you came in, to the country. And obviously, if you're still here, it's going to show you how long you've been here. But yeah, selling price doesn't matter for substantial presence test. So if there are multiple owners and one is foreign and the other is not, one disbursement will need to, okay, yeah, that's exactly what I said. So let's move on. So just so you guys know what the IRS defines as a disregarded entity, it means an entity that's disregarded as an entity separate from its owner under the regulations of the IRS code. So what are types of disregarded entities? Like I said, LLCs, single member LLCs, REITs are considered disregarded entities. So real estate investment trusts and subchapter S corporations, so your S corps. Problem is non-residents aren't allowed to form S corporations. Only US citizens and US residents are allowed to own S corporations. But I mean, S corps are kind of a dying breed. A lot of people like to use LLCs. At least here in Florida, just from an asset protection standpoint, LLCs are typically better than corporations. So just so you guys are aware, and this is somewhat off topic, but if you have an LLC in Florida and somebody gets a judgment against you, against a member of the LLC, they actually can't take away the shares of the LLC. They have a right to any distributions that the LLC makes to its members, but they can never take away your membership interest of that LLC. However, if you have a corporation or an S corp or a C corp, a creditor could actually take away your shares that you own of this S corp or C corp and participate in management and all of that, just as if they were you. So they could actually take away the asset from you. So that's just one thing to have in the back of your mind, when dealing, either, yourselves personally or with your clients. So someone asked, how does FIRPTA and capital gains affect foreigners? So FIRPTA is just an assurance that the foreigner pays their capital gains tax. So what FIRPTA is a prepayment of a capital gains tax. And typically your capital gain or the tax on the capital gain is going to be less than the withholding, because tax on capital gains is a percentage of the amount that the property has appreciated since you bought it. So let's say I bought property for, $100,000. Now I'm selling for 200,000. My capital gain is 100,000. So depending on my tax bracket, it could be, anywhere from 0 to 37%, if it's short-term or long-term capital gains. So if let's assume it's a long-term capital gain, because usually people hold on to real estate for, at least a year. So if it's long-term, 20% is the highest rate, in this situation, right? So the tax is $20,000. However, the withholding is going to be $30,000 because 15% of 200,000 is 30. So I'm actually sending the IRS more money than I need to cover my capital gains tax. So that's how FIRPTA and capital gains, interact with each other in this type of situation. Someone asked, can you do a short-term rental on primary residence with FIRPTA? So renting property doesn't matter. FIRPTA only applies when you sell property. So foreigners can rent the property out as long as they want. They could depreciate the property. They could take deductions, all that fun stuff. But as soon as they sell, that's when you got to, remit the FIRPTA withholding to the IRS. And then someone made a comment. I had a foreign seller buyer, sold one property and bought another higher price property, and the attorney took FIRPTA and it was never returned. Should that have been returned? Yeah. So typically the attorney is going to retain the 15%, and then they have 20 days from the date of closing to send it to the IRS. Now it's up to the taxpayer to file a tax return to claim a refund if a refund is due. So yeah, if in this situation, if the taxpayer, the entity, was due money after it, remitted the 15%, yeah, they should have gotten some portion of that back. If they sold at a loss, then they're entitled to all of it back. So hopefully that answers that question. So let's talk a little bit about the qualifying statement. So this, again, I said, is a little bit more rare now. So what a qualifying statement is just, a letter that you get from the IRS saying that they've either reached an agreement with you on what you pay the IRS. You're either going to get a letter saying that the transaction itself is exempt from FIRPTA, or that there's been, adequate security that's been furnished to the IRS to cover the FIRPTA liability. What does that mean? That you furnish like a FIRPTA bond to cover the 15% withholding. Now, this sounds like a great tool on paper, right? So like what I was saying earlier, if you sell at a loss, so, let's say I bought a piece of property for, $100,000. Now I'm selling for 90. I have a $10,000 capital loss, right? So I don't have to pay tax. I'm not going to pay any capital gains tax on that. However, I still have to remit 15% of 90, so about, $13,000 to the IRS, even though there's no tax that's due because FIRPTA requires it. So that's a situation where you would want to get a qualifying statement from the IRS saying, hey, look, IRS, I don't owe you anything. You owe me something. So why am I going to send you this 15%? So, back in the day, this used to work all the time. And, if you look at the instructions, the IRS has 90 days to process these requests. Now, in a post-COVID world, these things are taking much longer than 90 days to process the request. I actually had a client that I did a closing for in April of 2022, and I still haven't heard back from the IRS. So we're going on like 18 months, more or less. Not quite, but more than a year. And we still haven't heard back. There's just such a backlog between returns and just, COVID issues and firings from back in the day, or layoffs rather, that the IRS is just, really, really backed up.
Can I ask you a quick question, Stephen? Because it's kind of piggybacking on what that person asked about, oh, they bought something new. People are under the impression, and I'm just wondering why, because I've heard this several times, that like that the attorney is withholding the FIRPTA like in a escrow, and that it's the attorney that reissues it. You already said it's the attorney has basically 20 days to send it to the IRS. But I've heard this a lot of people say like, oh, well, the attorney never sent the money. What happens then?
So the attorney never sent the money, and they're not doing a qualifying statement. So the client wants to send the 15% to the IRS.
No. But I'm saying that what happens if an attorney withholds the 15%
And they just
and
forget
never
to
send
send it.
Yeah.
So everyone's on the hook. So seller, the IRS is first going to look to seller, because they have to, withhold the 15%. They're going to look to the buyer because they have the duty to withhold. And then they're going to look to the closing agent. So everybody is on the hook if a FIRPTA remission isn't actually sent to the IRS and somebody forgot to do it.
Okay, so buyer beware. How does a seller confirm that the attorney sent that to the IRS?
You ask. So there should be something on the closing statement that says, 15%, FIRPTA withholding. So that's a good place to start. And then what I would do is, check in periodically to, between closing and the 20th day and say, hey, have you sent this?
Yeah, but you do see how that I mean, most sellers don't know to do that.
Yeah, of course. But you know what? But it's also the seller's money that's, staying in limbo. So you would want the sellers to be proactive. Like, so if you represent a seller, you're going to want them to be proactive, be on top of their attorney and make sure they remit it. That way they get the clock started and, they don't incur, late fees, penalties, interest, all that stuff.
No, that's exactly what happened in this situation.
Yeah.
Wow.
So
it's
yeah,
basically
and
buyer beware, and the seller needs to reconfirm that the money was sent 20 days later.
Yeah, you gotta do it. If it comes in a day late, it's late, and then penalties and interest, and the IRS does not care. They crack down on this all the time. So this is one of the things that they harp on. And why? Because it's low-hanging fruit. So the IRS, they're on this mission now, right? They're on this crusade right now to go after non-filers and non-payers, because that's the easiest thing to go after. So same thing here. If you're not remitting and they find out about it, that, you're a foreigner and you sold real estate, they're going to go after you hard for FIRPTA.
Okay.
And
what happens when they go after the attorney? Because obviously the attorney withheld it. He's holding it in a bank account and he never turned it in.
I mean, he'll be responsible for the transaction as well. They have to pay penalties and interest. So everyone is on the hook. The IRS is going to look to everyone that was involved in the transaction. Obviously not the real estate agents, but they're going to look at buyer, seller, and closing agent to determine.
Even if the seller was innocent and the buyer is innocent and the one that's to blame is the attorney.
Yeah, because the attorney is the agent of the buyer or the seller. So it's their fault, unfortunately. Okay. I mean, look, I'm not saying that the buyer or seller doesn't have a malpractice claim against the attorney. Hopefully the attorney has malpractice insurance, but the IRS is going to look to everybody. So everyone's got to have their hands open, in these transactions.
Wow. Okay. Thank you.
Yeah, of course. Let me look at the chat real quick. Is there a time limit on that return? So I assume you mean the tax return. So just like U.S. citizens, non-resident aliens, they have to file their returns, their personal returns, by April 15th, just like everybody else. So they're not on a different timeline. Somebody asked, can foreigners rent property here in the U.S. if their visa and ID are currently expired? Yeah, they can. They just got to pay tax. Like anyone else. And then somebody asked, is the IRS responding within 90 days? No, they're, like I said, they're running way, way behind. So not too many people are doing the reduced withholding certificates anymore because they're just taking too long. So you're better off just filing and then getting your refund. So when you want to ask for a reduced withholding certificate, you're going to want to have at least two things done. You're going to want to have an ITIN number if you're an individual, or an EIN if you are, a foreign corporation or a single member LLC. Because you can't submit a request for a qualifying statement or reduced withholding certificate without those things. So, and that in and of itself takes a while. Like it could take about 8 weeks or so to get an ITIN number. They have to get your passport. They have to certify that it's authentic. They have to submit an application called a W-7, to the IRS to get this number, and they take a while to process. So if you have a client that already has an ITIN number, and they're ready to go at closing to do this reduced withholding certificate, and it's early on in the year. So let's say we close, February, March, it might make sense to do the reduced withholding certificate. Again, assuming all the ducks are in a row, because then at that point, the IRS will be put on notice that you're getting, you only want to withhold the tax, right? The tax that's actually owed to them, and not, 15%, which is generally more than what the tax is. And, it gives you some time, because your tax return isn't due until April of the following year. Now, let's say you're closing in December. Do you want to do a reduced withholding certificate? No, at that point, you're better off just filing your tax return, between January and April, and hope that you get your refund, before the end of the year, or, the following year. So it really depends when you're closing, what time of the year you're closing, in deciding what tactic you want to take, whether you're going to ask for a qualifying statement, or if you're just going to remit and then file a tax return the following year and ask for a refund. Let's see. Somebody asked, if the U.S. citizen owner purchased a primary residence from a foreign buyer and sign an affidavit, can the new owner do a short-term rental? So here's the thing about rentals. Rentals don't affect FIRPTA whatsoever. The only time FIRPTA ever comes into play is if you have a foreign person or a foreign entity that actually sells real estate. It's the only time FIRPTA will come into play. Let's see, anything else? Yeah, it looks like that's it. So let's move on. So qualifying statement, that's pretty much all I have to say about that. You just got to time it right. Again, if you're closing towards the end of the year, probably doesn't make sense. If you're closing towards the beginning of the year, it's probably worth doing. Because then you could probably get your money back sooner, or at least a response from the IRS saying, yeah, you're right. You don't have to send, $100,000. You just have to send, $15,000, whatever the math, might work out. So let's talk a little bit about the qualifying personal residence exemption to FIRPTA. So like I was saying, this thing is becoming less and less popular too, at least, down here. So the purchase price can't be more than $300,000. The real property that's purchased must be the primary residence of the buyer. The buyer has to be an individual. It can't be an entity. So no LLCs, no C Corps. It's got to be, a human being. And then the buyer or members of their family have to reside at that property at least 2 years after they purchase it. And they have to stay there at least 50% of the time during the 2 years after that acquisition. So what does that mean? A lot of times when people buy real estate, maybe only one person goes on title. Like, maybe you've got, young kids that are going to live there with you, but, they're not 18, so they can't be on the deed. So as long as members of your family, it doesn't even necessarily have to be the person on title, reside at that property for at least, 50% of the time. So, 6 months in a day for 2 consecutive years, then you're going to pass the qualifying personal residence exemption. And the buyer actually signs an affidavit here saying, yes, I'm going to use this property as my personal residence. I'm going to be here at least 50% of the number of days. Or somebody, in my family is going to use the property for at least 50% of the number of days during the first 2 month, I'm sorry, for the first 12-month period, 12-month periods immediately following the purchase. So within those first 2 years, you essentially have to live there a year, but it's got to be, you know, at least 50% of the time in each of those years. So you can't live there for a year and then disappear for another year and hope to pass the test. So you got to be there at least 50% of the time, each of those 2 years immediately following the sale. But again, like this is becoming less and less common now. There is a little bit of a nuance to this rule, though, which reduces the withholding. So let's say you are buying a property that's between 300,000 and $1 million. There's a little wrinkle to that rule. So instead of having to pay 15%, you're actually only going to withhold 10%. So at least that reduces, FIRPTA a little bit, by 33%. But the same rules still apply. So the buyer has to use it as their primary residence, or a member of their family has to use it as their primary residence. And again, they have to use it, at least half the time as their primary residence for the 2 years immediately following the sale. After that, it doesn't matter. But as long as you meet that 2-year requirement, you're okay. So here's another little wrinkle too. So real property owned by foreign and non-foreign owners. So the withholding in FIRPTA is actually based on the capital contribution to the property, and withholding is only on the foreign owner. So what does that mean? So let's say, my wife is a foreigner and we both buy real estate together, and I'm a U.S. citizen. We each put, $50, or let's say $50,000 to purchase, some property. And then we decide to sell. We decide to sell for, $200,000. So our basis is 100, collectively, and then our capital gain is 100. But FIRPTA only applies to her, not to me. So what is FIRPTA on a $200,000 sale? It's $30,000. But because she contributed half and I contributed half, only 50% of the retention applies to her. So she only has to withhold 15% of her half, so $15,000, and then I don't have to withhold anything because I'm a U.S. citizen. And the other thing too is that real property that's owned by husband and wife is presumed to be 50-50. So even if you own it as tenancy by the entirety, you're doing tenancy right of survivorship, where by Florida law, everyone owns 100%. For FIRPTA purposes, ownership is presumed to be 50-50. So just remember that FIRPTA withholding is based on the capital contribution of that foreign owner. So you could be a foreigner and own property with a U.S. citizen, and only half of the retention would apply in that situation. So let's talk a little bit about some special rules here. So we've kind of talked about domestic partnerships. Let's talk a little bit about trusts and estates. I don't know if foreclosures are a big thing at the moment, but you actually do have to remit FIRPTA in a foreclosure case. Deeds in lieu of foreclosure, I know that was really big back in the day, during the recession. And we'll talk a little bit about gifts also. So if a seller is a domestic partnership, trust, or estate, and if any partner or beneficiary is a foreign person, withholding is actually 35%. So withholding is higher on these in these situations. You could qualify for a 20% withholding. It just depends on certain issues. It's just very much a facts and circumstances test. But keep that in the back of your mind. Is FIRPTA withholding can be as high as 35% if you're dealing with one of these situations. So foreclosures, like I said, FIRPTA is still applicable to foreclosure sales, but the withholding is determined by the surplus, the amount of surplus that the foreclosure yields. Now, I'm going to be honest here. I don't know that, the clerk of court is going to sit there and figure out if the defendant in a foreclosure case is a foreigner, and they're probably not going to, send the 15% over to the IRS. But whatever the surplus of the foreclosure is, it's going to be 15% of that. So in foreclosures, FIRPTA payments can be made of an alternate amount that does not factor in the lien or the mortgage. So this is the only time where you're not actually looking at the sales price at foreclosure. So you could actually reduce the withholding or the percentage that you withhold by the mortgage that's being satisfied in the foreclosure case. But like I said, I'm pretty sure this is pretty rare now. I mean, I don't know. Foreclosures are still, big. I know they're not as big as they used to be, but just keep in mind that FIRPTA does apply to foreclosures. Again, don't know how they enforce this, but it technically does apply. Now, deeds in lieu of foreclosure. I know this was pretty big back in the day too. So they're subject to the ordinary FIRPTA rules. However, meaning that, whatever the property value, whatever it's worth, that's what you retain. So if the property is worth 100K and you're doing a deed in lieu, you got to remit, 15,000 because that's 15%. However, you don't have to withhold if the buyer is the only person with a security interest in the property, no cash or other property is paid directly or indirectly to a person with respect to the transfer. So like cash for keys, things like that used to be popular back in the day. You can't have any of that. And then obviously you have to satisfy like the notice requirements to the IRS under the regs. So just know that with a deed in lieu, you don't have to worry about FIRPTA as long as you meet these three, criteria. So gifts. So this is super common. So gift transfers of real estate are subject to FIRPTA. So remember, under the general rule of transferee or buyers, any person, foreign corporation, trust that acquires U.S. real estate by purchase, exchange, gift, or any other transfer. So if I'm a foreigner and decide to quitclaim deed the property to somebody, believe it or not, that transfer is subject to FIRPTA because I am changing title to a piece of real estate and I'm a foreigner. So 15% of the fair market value of the property or the value of the transfer needs to be remitted to the IRS. Now, even gifts to your spouse and kids will get you out of FIRPTA withholding. If you're doing a gratuitous transfer to your spouse and kids, you still gotta either remit or withhold FIRPTA. But again, let's think about this situation. This is actually like a really good situation, even if the IRS takes a long time for asking for a reduced withholding certificate. So because there's actually no money exchanging hands, you could ask for reduced withholding saying, hey, look, I'm giving a gift to my spouse or my children. I'm not recognizing any gain. Like I have no capital gain. I'm not making any money on this. So the withholding should be zero because there's not going to be any tax due. So this is a perfect situation to actually do the reduced withholding certificate because you're not expecting any money, come refund time during tax season, right? So you could actually do this, ask for reduced withholding, and if it takes as long as it takes, it's not going to affect your pocket. But again, the flip side to this, and I'm not advocating for not doing this, but it's really hard for the IRS to police this. You sign a deed, you record it, and that's it. Like there's no professionals involved in that transaction. I mean, like, unless I guess a lawyer does it, but a lot of people prepare their own deeds. They run to the courthouse, record it, and that's it. But yeah, it's kind of the honor system, right? That's, dealing with taxes and dealing with filing, tax returns and declaring income and all that stuff, it's the biggest honor system in the United States. So bottom line is, gifts are subject to FIRPTA withholding. Now, trust, I see this a lot. If you have a foreign trust that owns real estate and it's selling it, do you withhold? Yes. But what is a foreign trust? So this is a little complex, but I'll try to spoon feed everybody here, because it's a little different when you're dealing with foreign trusts. Actually, let me look at the chat real quick before I get into this. Oh, somebody asked about 1031s. So FIRPTA is different from 1031s. And by the way, foreigners can do 1031 exchanges. You still have to deal with FIRPTA, but you can do a 1031 exchange even if you are a foreigner. You just have to make sure that if you're doing a 1031 exchange, that you remit the 15% or ask for a reduced withholding certificate.
Yes, I'm quick question on that. I just wanted to mention it too, because the lady that was saying that she had a person that sold and then bought, and I think that's where the confusion might come in, that some people are confusing a FIRPTA withholding. If an investor is foreign, made proceeds, had capital gains, made proceeds on the sales, and didn't do a 1031, then the 15% would apply, because 1031s are subject to a time limit. You have to select and you have to purchase within a certain time. So if you do not do it in the due process, then you wouldn't get that 15% back, even if you bought another property, right? So that's what I was trying to clarify. I think people are mixing the two. That's what I was trying to say. Sorry.
So two things happen with 1031 transactions and you're a foreigner. Either you do what's called a partial exchange and the foreigner does a 1031, they remit the FIRPTA, the 15%, and then they pay tax on the 15%, and then they defer tax on the 85%. Even though you're trying to defer tax on the whole thing. But the problem is when you're complying with FIRPTA, you're keeping the money. And the way 1031s work is that you defer taxes on 100% of your capital gains if you reinvest all the proceeds you get from the sale of your property and invest it in a new one. But again, the problem comes in, well, these foreigners have to comply with FIRPTA, so they're technically keeping 15% of those proceeds in their pocket or their attorney's pocket. So then either they get disqualified just for that 15% and they pay tax on that 15% and they defer the 85% like I was saying, or they could actually do another thing, which is they pay out of pocket the 15%, remit it to the IRS and ask for a refund. So they basically, pay FIRPTA out of pocket, and then 100% of the net proceeds of sale, when they get it, they could defer taxes on that whole amount. So those are really the two options that foreigners have when doing 1031 exchanges, because like I was saying, like reduced withholding certificates are taking a really, really long time right now. And you have 180 days to close on a 1031 exchange. And I gave you an example earlier that I did a reduced withholding certificate for a client and it's taken over a year. So clearly they would have blown the 180-day deadline. So if you have a foreign client that wants to do a 1031 exchange, they either have to pay the FIRPTA out of pocket to get 100% deferral, or they pay tax on 15%. So really, those are the two options that are going on now. So hopefully that answers that question. And really good question, by the way. Actually, that's it. If there are 4 foreigners on a deed and 2 of them are removed and 1 is added, does FIRPTA apply? Yeah, so if you remove foreigners, it depends who's doing the removing. Like if a foreigner owns the property and they're removing somebody else, I mean, technically it's a gift, so then FIRPTA would apply. So yeah, you got to be careful with that, because it's being seen as a foreigner is giving up their interest in the property, by adding somebody else and taking themselves off. So FIRPTA applies to that situation. So definitely got to be careful with the quitclaim deeds. So let's talk a little bit about trusts. So trusts do have to pay the 15%. And again, remember, it could be as high as 35 depending on the situation. So the only way to get out of FIRPTA withholding as a trust is if you're a U.S. trust. But how do you know if you're a U.S. trust or a foreign trust? So there's two tests that we apply in determining what type of trust we have. So there's the court test and the control test. So, Cliff Notes version of what each of these are. A court test is just basically, essentially a U.S. court exercises jurisdiction over the supervision or administration of the trust. Meaning, when you set up a trust, the rules that govern the trust are of U.S., U.S. rules. So if I draft a trust for a client, and it's governed by Florida law, it's going to satisfy the court test. Because if there's ever like a lawsuit or anything like that, you're going to file suit in a U.S. court, in the state of Florida. So if a U.S. court can authorize or, exercise supervision over the trust, you pass the control test. I mean, you pass the court test. Now, what happens if I draft a trust and, like Mexico law applies to the trust? Well, you're going to fail the court test because a court within the U.S. is not able to exercise primary supervision over the administration of the trust. A foreign company, a foreign country is. So the other test is the control test. This one's a little bit easier to kind of grasp. So if one or more U.S. persons have the authority to control all of the substantial decisions of the trust, you pass the control test. Meaning, if you have a U.S. trustee and they're the ones that are in charge of everything having to do with the trust, you're gonna pass the control test. So let's get into this a little bit further. So do trusts need to withhold? The answer is it depends. I hate to give the lawyer answer, but it depends. So if you fail either or of the court or control test, you're automatically considered a foreign trust. Doesn't matter that you passed one or the other. You have to pass both tests in order to be considered a U.S. trust for income tax purposes. Meaning, if you pass both tests, then you don't have to worry about FIRPTA. But if you just fail one of them, you still have to remit or withhold for FIRPTA purposes. So the court test again, if a trust is governed by U.S. law, in other words, the laws of a state of the U.S., and is in fact administrated exclusively in the U.S., it will pass the court test. The control test, however, like I was saying, is a little bit more nuanced, and it requires a U.S. person to have authority to control all the substantial decisions of the trust. So what's a substantial decision? It just means it's a decision that a person is authorized or required to make under the terms of the trust. So maybe the trust says, hey, I need to distribute, income annually to this beneficiary. And if the person that does that distribution is a U.S. person, they're going to pass the control test. So remember, got to pass both tests in order to not have to withhold for FIRPTA. But again, you guys don't necessarily have to worry about this. This is really more the attorney's job, but this is just to inform you guys what happens with trust, because that's just a question I get all the time. So that's probably going to be more information than you need to know, but at least now you know it. So trust can be a little bit difficult. So make sure when you're dealing with the trust and there's a question as to whether or not, it's a foreign trust, make sure your CPA or like a tax attorney like myself is involved in the transaction so we can figure it out. So we talked about this a little bit. So what are the withholding procedures? So the purchaser has to report and pay over any withholding within 20 days of closing. So if you're going to remit, you're gonna do it before 20 days. Otherwise, penalties, interest, and all that fun stuff, gets kicked in. And FIRPTA is reported using IRS forms 8288 and 8288A. So if you're going to remit money to the IRS, those are the two forms that you're going to file. If you're going to ask for reduced withholding, it's going to be reported on 8288B, which is a little bit of a longer form these days. And you have to explain how much you initially bought the property for, what you're selling it for, and why you're asking for a reduced withholding. Are you selling at a loss? does the withholding exceed the tax? Those are situations, where you would ask for reduced withholding. So how do we avoid all this stuff? So I'm about to give you the secret sauce in terms of avoiding FIRPTA. And in case the IRS is listening, we all pay our taxes and we all do what we're supposed to do. But and by the way, all this stuff is legal. People do it all the time. So the best way to avoid FIRPTA is this structure right here. And you also get to avoid estate tax as well, but we don't necessarily have to talk about that so much. So you could actually have this individual own this LLC directly, and this LLC will own the real estate. So you could actually disregard this for the moment. But then you're going to say, hey, Steven, I thought single member LLCs are subject to FIRPTA. And that's true. But if this Florida LLC elects to be taxed as a C Corp, then FIRPTA withholding doesn't apply. And remember what I was saying about LLCs and corporations from an asset protection standpoint is you could take away shares from somebody that owns a C Corp, but not an LLC. But an LLC for tax purposes can still elect to be taxed as a C Corp. So one has nothing to do with the other. If I do this and elect C Corp status with this, and somebody sues, the foreigner individually, they can't take away the membership interest of the LLC because it's an LLC. Tax elections don't matter. So that's how you avoid FIRPTA here. And you don't have to worry about, paying withholding when it makes a distribution to the foreigner. Because, typically you're going to keep the money here, reinvest it. Maybe you do your 1031 since you have a Florida corporation essentially that owns real estate. So that's one way to avoid FIRPTA here at the property level. Now, estate tax, that's also a big thing for foreigners, right? So this is, I actually teach another class on this subject, like, purchasing and selling real estate for foreigners, and we talk about estate tax. So as US citizens, if we own up to about $13 million, really the real number is 12.92 million. If we have $12.92 million of assets and we pass away, we actually don't have to pay Uncle Sam any estate tax. But for every dollar above 12.92 million that a US citizen has when they pass away, 40% goes to Uncle Sam. So they have a hefty tax bill. Now, what about foreigners? So they don't have 12.92 million to play with. They only have $60,000. So essentially any foreigner that owns a condo in Brickell or a house in Coral Gables is going to pay 40% of whatever that property is worth, less $60,000 to the IRS and estate tax. So how do we get rid of this tax for a foreigner? If that foreigner owns the real estate through an offshore entity, like a lot of people use BVI back in the day, that was like really popular. Now we use, Nevis. It's cheaper. They don't have like a public registry, things like that, privacy reasons. If they own their real estate through this type of structure, so a foreign corporation owns Florida LLC, taxed as a C Corp, LLC owns the real estate, and they pass away, they actually avoid paying estate tax. Why? Because estate tax applies to individuals who own property here in the US. This foreigner doesn't technically own anything that's US. He owns a foreign entity that can live on in perpetuity. Entities don't die. That owns another entity that owns US real estate. So that's how you have your estate tax blocker up here, and then you have your FIRPTA blocker down here. So you actually avoid 2 levels of tax when you have a foreign person owning real estate. So the key is, if you guys represent somebody that's looking to buy and they're foreigners, you should make sure they set this up ahead of time so that they could avoid these 2 taxes down the road if they sell, or if God forbid they pass away, while they own the real estate. Does anybody have any questions on this? Because I know this is somewhat complicated. You could just stick it in the chat, or you could just talk out loud now if you like. Don't everybody jump at once. Okay, somebody raised their hand. Go ahead.
This could be a whole different CE class, but title agents now have to, if a property is being bought, I think it's over $800,000. And it's being paid cash by an LLC or an entity. The title agent now has to collect the information on who exactly is buying it, like a name, to report to make sure that the buyer is not using laundered money.
Yeah, of
to-
course.
Does that play a part in what you're discussing now or trying to explain now? I mean,
No, I mean, they're gonna source the funds either way. So this could be a cash transaction or it could be financed. It doesn't matter. But yeah, you do have to go through that process of sourcing the income if it's a cash transaction. If there's financing, it works just like any other closing. So, you know, long story short, if you have this structure and you're looking to purchase or you're looking to sell, nothing's really going to change. There might be a little bit more involvement from the lending side, because the lenders are going to want to, you know, get, you know, tax returns and certain corporate documents from these entities, especially because there's a foreigner, but it really won't change anything. So, I mean, OFAC might apply, like with wires and things like that. Like if it's a cash transaction, you're still going to run up the flagpole, you know, where this money is coming from. But the same is true as if this entity didn't exist. So if you have a foreign person buying or selling real estate, you would still run into those same problems. So simply having this structure doesn't necessarily change that. And somebody asked if we help form these. Yeah, we do. So I set up the structure all the time for the foreign clients. And like I said, it's great because they avoid 2 levels of tax, you know, one at 40% and then one at 15%. The only thing is that this structure isn't necessarily cheap. You're probably looking at paying $7,500, but in the grand scheme of things, it's better than paying, you know, almost half of what the real estate is owned. And you just have to do this one time and it, you know, you could use it forever. So I highly recommend this structure if you guys have foreign buyers. So you could set this up ahead of time, and then when they sell property just like if they were a US citizen, and then you're good to go. I don't know if anybody else has any questions about this structure. Doesn't look like it.
Even I have a question.
Sure.
If they are already property owners, can it be transferred into this Nevis Corporation?
So you can reverse engineer this. It just takes a little bit of time. Why? So let's say this foreign person owns this property directly, right? Technically, a transfer to an LLC would trigger FIRPTA, right? Because you have a foreign person disposing of US real estate. So here's the trick to that. You have to submit a reduced withholding certificate to the IRS. So you do the transfer from this person to the LLC. And you're going to say, hey, IRS, this is a single member LLC. It's disregarded for tax purposes. So it's the same thing as if I owned it directly, because it's a disregarded entity, right? You're disregarding this entity for tax purposes. So you take the position that disregarded entities is the same thing as if, you know, for tax reasons, the same thing as if I owned it. So you kind of use like their logic against them, and then you could do a quick claim deed from you know, this person here to the LLC, while simultaneously asking for a reduced withholding certificate from the IRS. Now, once the IRS responds and says, okay, you're right, this isn't a taxable event because it's a disregarded entity, then what you do is you form your Nevis Corp or your BVI, or, you know, whatever foreign entity you want to use up here. Foreigners don't get taxed on the transfer of shares of an LLC, or I should say membership interest of an LLC, or shares of stock in a C Corp. So you'll do your C Corp election. This foreign person will transfer their shares to this Nevis Corp. And obviously this Nevis Corp is going to be owned by this foreigner. So that's basically how you reverse engineer this. So if we were, you know, if this person were a US person, you're obviously taxed on the transfer of, you know, US stock or US membership interest. But there's an exemption for non-residents or, you know, foreigners they actually don't get taxed on the transfer of stock. It's completely tax-free. So that's how you reverse engineer this. It just takes a little bit more time because you have to get the IRS involved. But long story short, I guess it's not, it's never too late, but it's better, it's faster to do it ahead of time on the purchase side. Because this, can be done, in a couple of weeks, almost instantaneously. So hopefully that answers your question. Let's see anybody else. So liability. So we talked a little bit about this earlier. So closing agents and title attorneys. If the seller provides false information on a non-foreign affidavit and the closing agent knows about it, they have to notify the IRS and the buyer immediately, to avoid, getting pegged on any of this, or potentially avoid getting pegged on any of this. And remember, the closing agent or the escrow agent is responsible for doing the actual withholding of the tax. Why? Because they're going to be holding all this money in escrow. So while the buyer is responsible, really it's the buyer that's responsible for the withholding, the closing agent is the agent of the buyer. It's essentially somebody that represents the buyer in a real estate closing. So it's an extension of the buyer. So failure to withhold by a closing agent or an escrow agent could result in them paying the tax. So like I said earlier, everybody's on the hook for this. Now let's look at the purchaser. What's their duty in withholding? Well, like I said, because the money starts with them, under the letter of the law, they have the duty to withhold because they're the ones that are funding the transaction. So failure to withhold by the buyer, by the transferee, could result in them paying the tax. And if they fail to withhold, not only do they have to pay the tax, but they could potentially pay interest and penalties to the IRS. Because again, they are the ones that have the duty to withhold. Yes, the seller is the foreigner and they're responsible for paying the tax, but the buyer is the one that, comes to the closing table with the money. So it's up to them to withhold the 15%. So practicing tips, right? Ask your seller clients or even buyer clients if they're non-resident aliens, or maybe they bring it up and then just kind of dig in a little bit and see, hey, how long have you been in the country? Do you have a visa? Are you applying for a green card? Know about all this stuff ahead of time. That way, you know how to structure these deals and you guys could look like heroes. And then if you're not sure if they meet the substantial presence test or the green card test, ask someone like me, ask an attorney, and we can figure it out, right away. But the key thing here is, getting to the closing table on time, every time, and being able to know and plan for these non-residents that are either looking to buy or sell real estate. And now some FREC stuff. So just remember, as real estate licensees, like they like to call you guys now, don't engage in the unlicensed practice of law. Hopefully you learned something of value in this course, and now you could spot, issues when you're listing or selling property that's owned by a foreign person. So you should have a basic understanding of FIRPTA, but don't give legal advice. Don't put on your attorney hat. This isn't Suits. Let your CPAs, let your attorneys give the advice, handle the transaction. Just spot the issue and say, hey, look, I think we may have a problem here. I think FIRPTA might apply. Let's speak to so-and-so, and they could, kind of hold our hands in the transaction and see what we, can and can't do to potentially, plan around this so we don't have to remit or we don't have to, withhold the 15%. So always consult with an attorney to know whether or not FIRPTA applies. And again, if you guys have any questions, my contact info is here on the screen. Feel free to email me, call me whenever you want. If you have any questions, I'm more than happy to answer them. I don't know if anybody has anything in the chat, but
No
again,
questions, a couple of compliments, tons of value, Stephen. Thank you. And thank you, Jesse, of course.
Thank you.
so the secret code will be FIRPTA. Very, very secret. So
Oh,
just
okay.
just email me now. Remember, you got till 5 o'clock today. If you want your CE credit, send me your full name, your license number, and the type of license that you have. And then I'm going to try to get everything submitted by the end of the week. And if anyone has any issues with the credit, just let me know and I'll try to take care of it for you.
So guys, again, you're going to be emailing him in the subject line, the word FIRPTA, FIRPTA, to the email that he has applied here, which is SG, as in Stephen Gurian, at easyestateprobate.com. And just make sure to write in your name. I'm doing it as we speak. You want to write the name that appears on your license. You want to put in your 2 letters. So it's SL or BK, and also your number. I think I'm done, Stephen. There we go.
Thank you, thank you, thank you. Awesome training.
Thank you very much. Hopefully it wasn't too boring. I know FIRPTA isn't exactly the coolest topic, but
no, it's very cool and it's actually very interesting, and we're all very appreciative, Stephen, for the time that you put in. Guys, make sure to reach out to Stephen if you have some need for probate, for easy probate, if you're needing information, but also, reach out to him and introduce yourselves. I always say this to people, it's a good idea for you to reach out and introduce yourself to all vendors. When you have a name like Joe Perez, I'm sorry if there's a Joe Perez, then you might get lost in the mix. When you have a stupid name like mine, no one ever forgets me, so that's not going to happen. But you always want to make sure that your vendors know who you are. Reach out to them, let them know that you're here to help them and do business for them also. It's always a good idea. I know Stephen would appreciate that. Stephen was actually telling me today that he's going to be at the Rock the Market event in July, right?
Yep, I'm going to be there. So we're going to sponsor it. If you guys can remember this ugly mug, come track me down. Let me know if you really like the course or not. And maybe I'll buy you guys a drink. And then I'm teaching another class in August, right?
Correct. Correct. We have another one coming up. And let me just share the screen real quick. Yes. Let me just share my screen real quick and go back into londonfoster.net under education. So you guys know where to look. Go to your calendar. So annoying. I swear to you, this is my computer. I think I've done so many Zoom calls that it's like allergic to it. Guys, you want to go under education, under the calendar, and you're going to be able to look up any future trainings. When did you say it was? In August?
I think, let me check real quick. I know we have like 4 of them this year.
There we go. How do you like them apples? Wednesday, August 23rd, 10 a.m., 1031 exchange. We touched upon it today, but there's going to be another one for Stephen. So guys, most definitely look out for that. And also look out for any other trainings that we do. This is the one for the 24th. The next one coming up is June 14th. That one is Deciding to Win with Neil Oates. The one after that is that's actually a burst bankruptcy, foreclosure, and REO with Janet Mercado. She's our new vendor. Janet, did you ever make it to the call? I couldn't see her.
Yes, Memo, I'm here.
Oh, hey, Janet, how are you? Guys,
Good.
I wanted to introduce you guys to Janet at the beginning, but unfortunately, it seems like she was having some issues with her phone. Janet is our new preferred vendor for title. Her company's name is iTitle, and you guys can look it up under the vendor section under title. Janet has very graciously also donated, I think it's 4 or 5 trainings with continuing education. So guys, go under there and look them up as they're coming up. It's great to have trainings from Stephen. We're going to have some from Janet for title. We're going to have some for contracts. We have Neil Oates, which is a guest speaker. So we have a pretty busy schedule coming up. So you guys definitely look it up and reach out to all of these vendors. You guys can look up Janet's information right there. Janet, do you want to say anything before we say goodbye?
Yes, absolutely. I'm so happy to be here with all of you. I'm excited to be making these relationships with London Foster. I'm here to answer any questions. You
Move
have
your
my
camera,
contact
Janet. Move your camera
information.
because all I can see is from your head up, from your forehead
Oh,
up. There we go.
Sorry. I had to walk out. They're
I
doing
know, I
some
know.
construction in the office, so it's a little noisy back there, so I just walked outside real quick.
Thank
But
you. Thank you.
please feel free to reach out to me. You've got my email, you've got my phone number. If you have any questions, please, I'll be more than happy to help you in any which way I can.
All right, thank you. Stephen, again, thank you so much for your time. We look forward to seeing you in July at the Rock the Market. Guys, know that this training is recorded. I will be editing it this week and it'll be up next week. Again, for those of you that are planning on getting the continuing education, make sure that you reach out to Mr. Stephen Buriang directly. Let me see if I can show you the email that I did. Is it? Oh, I guess I can't. I guess I did it from the other email. But basically what you want to do is you want to look up your license number, provide him with your license number, provide him with your full name and the word FIRPTA, F-I-R-P-T-A. Guys, do not write this poor man at 5:05. The cutoff is 5 o'clock. I am embarrassed. He was telling me that the last time he was getting emails from people a week later. Guys, we are professional real estate professionals, right? We are realtors. We are serious people. We want Stephen to at least think that we are serious people. Do not bother this man tomorrow or after 5 o'clock. 5 o'clock is the deadline. He's going to cut it off. And so we're going to show that London Foster agents are true blue professionals and that we are going to have that taken care of. Jesse Ujoa, did you already send your email? Did you already do it, Jesse?
Check the chat. Check the chat.
Oh, I know you did. I know you did. That's why I asked. Email sent. Okay, guys. Thank you so much to everyone. I love seeing everyone's face. I see Joshua's here. Kelly's on the phone. Kelly's closing deals. Who else was here? Oh, hold on. Everybody's moving. Margaret, Moises Pontes. Look at that view. Jose Salgado. Everybody's here. Guys, thank you so much for your time. Thank you so much for participating. Paolo, I see you. Paolo's got a great view too. Paolo, man, you know what's bad when you show up with your beard and you've got yourself looking, all clean cut behind you.
Yeah.
You can't do that.
I know. I was a little, I'm still in a busy morning and busy afternoon as well too. So I'm
good.
I did at least I made it. So I was
glad you did. I'm glad you did. And I want to thank everybody for showing up on time, participating, asking questions, really leaving a good impression in Stephen's psyche here, because I want him to know that London Foster agents are serious people, that we're business oriented, that we're professional, that we show up on time, we turn on our cameras, and we send our emails. Stephen, as always, a pleasure to see you. Wonderful to have you on our team, and I thank you for your time.
Of course, anytime. And if this sucked, tell me. If you liked it, tell me.
No
problem. No, because I'm always open to criticism.
If it sucks, I wouldn't have been reinvited you. Because you're such a good trainer, and I tell you guys, I don't know if you guys looked at his auto signature, and this is not a joke guy. This is a serious guy. This is a guy who has a master's degree in law when it comes to taxation. This is not just some guy that's doing this on the DL. This is a very serious professional trainer that we're bringing to you, and this is the reason why Bobby chose him, is because of his curriculum and because of the excellent training that he's done. And he's actually, I think you signed up for 4, right? A year?
Yeah, I have 4 a year with you guys.
4 a year. And I mean, and I'm telling you guys, and you guys know this, we don't give those away. It's because we did so well, and everybody was calling and writing Bobby and giving him such great feedback that Bobby said, listen, we need to get this guy on a permanent basis. Our trainings are very valuable. We have people that are paying us, offering to pay us a lot of money. We don't accept it. We're not looking to do that. What we're looking to do is give you guys what we can't get at the association. And these kinds of trainings, these kind of professional input from serious people is what we're looking to do. Janet also is donating, I think it's also 5 trainings with Karen Michaels. Has anyone ever attended one of Karen Michaels' trainings? You guys remember her? She's with Fidelity. She's amazing. It's also the same idea. It's people that know what they're talking about. We want to bring these people to you. So again, Stephen, thank you so much for your time. Thank you to everyone who participated. For those of you that didn't share your camera, you're dead to me. I know who you are. I see you, Marcelo. I see you, Pinita Sanchez. I see you. But know that Marcelo sends an angel face. All right, guys, have a great day. Everybody be very productive and have a great day, and we'll see each other real soon. Take care.
Thank you so much again for having me. I really enjoyed doing this. And if you guys want more info, follow me on Instagram at Your Probate Attorney.
I love that. I love that. I'm gonna go look for it right now. Yessie's already on it. Go, Yessie.
Yeah, Yessie, she's on it, man. She's on it.
I don't have Instagram though.
What? Oh my. Oh yeah,
I know.
man. Oh yeah, man.
I
I was just telling Stephen my real age that we're not going to get into, and I have Instagram,
I know.
and I'm old enough
working
to
on
be
it.
Stephen's dad. I'm old enough to be.
Oh,
Stephen's
tampoco,
dad.
man. Yo,
Más o menos.
tampoco.
Más o
But when I
menos,
do,
más o
Steven,
menos.
I will follow you. I promise.
What is it? What is it? What is your Instagram?
At Your Probate Attorney.
Your probate attorney. There you are. Look at him. There we go. Follow.
All handsome in that picture.
Oh my God, look at that picture.
Unlike the real deal.
Oye, acabando. Listen, guys, thank you so much for your time, guys. We're gonna go ahead and say goodbye, and we'll see each other real soon, guys. Take care.
Take care, guys.
Is Uncle Broker taxing your commission too much?
Without giving the support that you signed up for. Don't be a victim of outdated broker models. It's time for an upgrade.
Here is a golden chance to make 100% commission.
With London Foster. London Foster's main goal is to empower an associate and make sure you, the realtor, are getting the most out of your hard work and commission. With an excellent proven track record, latest tools and technology, and exceptional experience, we strive to create the perfect environment for our associate, providing multiple opportunities for you. No hidden fees and no gimmicks. 100% commission for our associates by empowering you with the benefits like
A personalized website with IDX searchability, simulcasting your listing to sites like Realtor.com, Zillow, Trulia, and different search engines for brand recognition. An office at the famous Lincoln Road.
direct broker support and free weekly and monthly training from Realtor.com and other partners. A personal business trainer resolving all your queries. In-house private equity fund. No waiting on checks. Get it on the closing day.
We understand it's a very competitive market out there. The old broker models don't work anymore. And you deserve more for your hard work. So it's time you give yourself an upgrade with London Foster.